Good morning, everybody. Welcome to Phoenix Trading Strategies. Free trading where more strategic knowledge and information allows you to trade successfully. Welcome to non-farm payroll with Phoenix Trading Strategies. Today is January 8th. It is 8:15 a.m. Eastern Time. Before we continue, let's go to the disclaimer, and then we'll go to the charts. Disclaimer: future stocks and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in future stocks and forex markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy sell future stocks or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website or presentation. Past performance of indicators or methodology are not necessarily indicative of future results. Being that said and done. So let's take a look at the calendar real quickly, and then we'll go to the charts. Today is non-farm payroll. Employment numbers coming out today for Canada. Unemployment rate, building permits. For the U.S., we have average hourly earnings month on month, non-farm employment change, unemployment rate for December. We have wholesale inventories at 10 a.m. Eastern, and then consumer credit later on this afternoon at 3 p.m. I don't think consumer credit is going to make much of a difference. I think all the liquidity is going to be played right here, right now, within the next 15 minutes. It is based on unemployment numbers. Canada and the U.S. are in play in that regard. Now, I like the Euro Aussie. The Euro is already making a move to the upside, but I was looking at the Euro previously. Let me move my market analyzer here so we can move more accordingly. I have this on a 10-minute, and the reason I do is because on the 240-minute, I have a signal here going long. I have a signal here on the 10-minute go long. I have a very strong support level here and here. This is a 240-minute, and this is another level here on the 240. So, you know, that's a pretty strong support level right there for me. Now, normally when I see something like this right before non-farm payroll, it makes me a very strong believer that long is the play in this case. And it looks to be, for that matter. Now, however, when I look at the pound dollar is a little different. The pound dollar has already come down significantly. And I'm trying to find a reason why it would sustain itself. Now, this one's a little tricky because it already came down. You know, they went long early afternoon to 146.42, and then they came down basically 100 pips practically. That's a pretty aggressive move to the downside before non-farm payroll. So this one has me sort of wondering, is there a trade to the upside, or are they going to come up, hit this level, and then bounce right back down? And that's the same scenario that I'm seeing with the euro, more or less. Now, here, for instance, we do have two pivots here, we have two pivots here, and we have a support level here. Now, the play could be, in this case, they'll hit this level, they'll come down, basically sweep 20 pips down, and then go up. Now, if that's the case, that means that the numbers, the unemployment numbers, are not going to be as great than what everyone expected. So, if we mark this one as well to go long, I would be somewhat surprised. However, we've had surprises in the past. So my only concern is that you see the aggressiveness of the trend dots and the trend stop and the aggressiveness of the move. The rebalancing that's taking place here is not, would have to be extremely aggressive, and for that they'd have to come down a little further. Now, if this candle breaks to the upside right before the announcement, 10 minutes before, it would really have to break significantly in order to make me a believer, and that would have to bring it up to 145.91. That's why I'm not quite a believer yet. We're talking about a 10 pip difference right now in this candle. Now, the one that really brings my attention is the USCAD. This one's a little tricky, and not so in the case that, we don't know what their employment numbers are going to be, is that they've already began to move against the dollar. So are we looking at dollar weakness today? And if so, they've already started to break levels, because this is a mid-range level, this is a mid-range level, and this one here is already in play. And if that is the case, then we should expect and anticipate this move to go down. Based on that, we also have another power dot here, which is basically supporting this price level. So this one is basically supporting 140.96. When this one formed, it was to support 140.96 as a support level, which has been broken now. Now, they broke it, came back up, came back down. So they're playing this game right now, but everything looks in line as if they're going to short it. And if that's the case, it's because they have strong employment numbers. Questionable. We still can't say whether it will be the trade of the morning, or whether the euro will be the one that really makes up for all of it. Now, again, that's a big risk saying euro long when it appears that we're going to have strong employment numbers. But we have strong support levels here, and they haven't been broken. And every time that they've attempted to break, you can see the aggressiveness of the move to 109.40. Well, from here, you're looking at practically an 80 pip move. Now, that's why I'm sort of in a quandary here, because this move is either premature on their part to come down before the announcement and set it up to go long, or they're going to continue to come down. Now, the US yen, this one's always been a real sticker, and normally I'll look at a 45-minute to see what type of play they're playing. Now, here's a pivot right here, and here's a pivot right here. Now, again, if we're looking, for a reason to trade, this one's not giving us one at all right now. But if I look at a 60-minute, you can see how they've been trading around this daily level right here. And that's why I mapped this level out. It's a daily level, and they still haven't played fair. Now, the 90-minute says short. And that's very significant, because normally they will begin to rebalance their positions hours in advance before the announcement. So marking this here is very significant for us, because when we take it down to the smaller minutes, it's either going to be or not be. To be or not to be is the question here. Fact of the matter is that it does look like they want to aggressively break this level. And I say that only because of the aggressiveness of the power dots, of the trend dots. I say this because of the aggressiveness of the candles. I say this because of the aggressiveness of, of the trend stop. They've been challenging, but at the same time, every time they've come up, they've pulled right back down. And so they've established this level to rebalance their book and do their high frequency trading around it. So this is going to be very interesting to see, because if they do adhere to this level, which is something that I'm trying to wrap my head around as to why they would do such a thing, then we should see this potentially go short. But they've had a tendency to use the trend stop the way they're using it here on the 30-minute to actually go long. So, the fact that it would be an inverted trade against the euro and the pound dollar sort of concerns me. Now, we do have a pivot here, and then, price action has dropped significantly. And normally before a move, they'll move against the real move. So either they know something that we don't, and more than likely they do, or they are at this point simply trying to mislead people in trade. See here on the 15-minute, we have go long. Now 15 minutes showing this, The fact that they came down, came back up, retested, came down, didn't come down any further, and that they should form power dots here, and that there's a power dot level right here, even though there's a 90-minute, it could be right at this point. But like I said, the 90-minute is usually the one that leads the pack. So if we go based off of the highest time frame, then I would say that they're going to make a move up the way this is saying, and then from here come down. And that would make this a head and shoulders of the worst kind. And if that is the case, then we can anticipate this trade going short from here. So with 4 minutes to go, it'll be a very interesting scenario in that regard. Usually I like looking at the 7-minute more so than the 5, and the 7-minute is telling me go short here, here, and here. That's a very strong, message in that regard. That if that's the case, then we should anticipate the same for the euro. But in that case, we have this here saying the euro go long, but they're already starting to break down on this level. So deception can be real doozy. Now here's the problem with trading non-farm payroll. You cannot, at this particular moment, take a trade and expect for them to, for instance, honor stop losses. They don't. I'm in a place of caution today, only because most of the trades that we've done this week have been very effective, and I don't like giving money away, at least not now. So I say we take, we let the numbers come out and see what they actually have to say in that regard. Now, if I look at the bonds real quickly, they really don't know which way to go at this point. They're all confused. If I look at the Dow, the Dow's already making a move to the upside. It already began. And that would justify the US yen trade. If we look at gold, gold came down after coming up to 11.13. We took this at, God, where was it that we took it? We took it here. We took it here at 10.96. So it came down overnight. Very interesting scenario. We got 1 minute left. Let's see what the US yen does. This one's always a whip of the worst kind, but I'm curious because of how they're trading it right now. Like I said, signals say short. We'll see if that's how they play it out. Yes, patience, most definitely. And with 1 minute to go, yeah, so signals say short US, long euro, short USCAD, long pound. And everything else in between doesn't really matter at this point, does it? I like the way they put this trade on hold. It's like no movement. Suspense. There it is. See? They're already starting to widen the spread already. Oh, what a treacherous trade. Now, we'll see what happens here, because if it didn't, and this is what I was afraid of, jobs numbers coming out, that the move wouldn't be that big. Now, they broke through this, this resistance level, but let's see what the job numbers are. Okay, so the U.S. adds 292,000 jobs. That's not bad. That's a pretty good number, actually. Canada adds 22,800 jobs. So the question is, will this be strong enough to drive the markets up, or is this trade over and done with and we're looking at a short? Now from here to here, that's a 40 pip, 30 pip move. I'm willing to risk 20 at this point, but I'm not yet. Not yet. I don't think this has the strength to continue because this move was too aggressive and there was a very strong pullback. And they're not, and they're making a strong case that they're not going to break above this daily level. So I need to see that before I make a decision. And right now I haven't made a decision yet. So if they don't come up here, guess what? Well, I think they're pretty much done. So let's counter trend this trade and see what it does. I'm not willing to risk much, but I'll take 15, 20 pips stop loss on this. I would set it here at around 118.80 as a stop loss. So we'll see what happens because it's either going to gain momentum against us or maintain. And if it maintains, then they're going down. So let's see. And see, we would have had a much more aggressive move by now. That's what, my analysis is based on what they've done. And it hasn't happened yet. So this candle's to some degree is very significant because if they pull right back down, then they pretty much gave the trade away in that regard. So right now it's more of a waiting game at this point. But like I said, I'm not willing to risk more than 15 pips. That would be my exposure. So come on, define. Because you haven't defined yet. In the meantime, let me move this over here, and I'll keep track of the numbers on this position. See, look, it's coming back down. Let's take a look at the euro now. The euro, yeah, see, they came down really aggressively as well, but they're holding. And the fact that they're holding at 108 even is very significant. But again, it was a very misleading trade. That's why I said that, I wasn't sure. And at the beginning, and getting in on a trade, forcing a trade like that just didn't make sense. The fact they didn't come down too much, because they came down from 108.61 to 60 pip move. It's not bad. It's a pretty decent move. But I would have expected a much more aggressive move on their part in that regard. And it didn't happen. So let's take a look at the CAD. The USCAD. And this one, they just beat everyone. They did go short, came up short. I'd say short now. Only because it seems like they're going to weaken the dollar in this case. But imagine if we would have gotten in this trade previously, boy, they would have beaten us to death, and then kicked us out. And again, stop losses are not honored during non-farm payroll. And here, I'm not willing to risk more than, again, 15 pips would be my maximum exposure. The US yen is already positive, so we'll see if it continues in our favor. And again, even though the job numbers are strong, there's just too much geopolitical nonsense out there that would not really make it a viable move to the upside. And if we look at the euro, see the euro is already starting to make a move up. And sometimes they'll do this. Sometimes they'll play this ridiculous game. So we'll take a position long on the euro and risk, again, no more than 15 pips. I think it'll retrace from here to the upside. If anything, it'll come right back up to, to this level. I don't think it'll do much more than that, but it should be significant in that regard. The US yen, we're up 10 pips, 11 pips right now. So let's take a look at that US yen. See, the pullback was very aggressive. Now, if it breaks this level, 118.48, then we should have a smooth ride and we should be able to pick up 20, 30 pips on this trade. Oh no, you got out too quick, huh? But you made 9 pips. Hey, sometimes a little bit of money is better than no money at all. At least you didn't say today that you took a loss. You actually made some money. That's a little bit more significant. Now we're down 3 pips, 4 pips on the USCAD, and we're down 6 pips on the euro. This one is still holding. I'm still firm that this will come down and not go up. Now we're going to see what's going to happen. This is where it becomes interesting because this candle is where everything plays. I just moved it to the 5-minute. So as you can see, the 7-minute gave a much better view of the play itself. If we go to a 10-minute real quickly, if the 10-minute holds within the next 2 minutes, then we should see this thing come down even further. Now we're at break even on the CAD and 1 pip negative on the Euro USD. So that means that our positions are holding fairly well. But, a lot of people don't look at the 7-minute, and I believe that the 7-minute is very significant when you're trading. Now, if we look at the pound, we just might find an entry on the pound based on what's been happening. I said long, and I said long here, and I think that from here is where it's going to move. So I would take this trade here, and my risk would be here no more than 10 pips. If I have a stop loss for my entry, 145.60 would be my stop loss here. I don't think I would expose more in this regard because, they came down pretty aggressively, and they came down again, retested this, and they didn't go down any further, and then they came right back up. So this, to some degree, is significant in that regard. Now, based on the trade, I'm only down here, down 2 pips, 3 pips, which is nothing at this point. Waiting for the trade to actually unfold after the news release, to some degree, it was much safer for us than to get in a trade that would not, pan out and take all that risk because the signal wasn't clear. Now, I did say long on this one. I was not, misled in that regard, but they hit the short real hard to try and stop everyone out. So at this point, the only thing that is concerning me is that the trend stop, in this case, you see these trend dots, have come down pretty aggressively, and normally they'll come and use them as a resistance level. Now, this one hasn't formed yet, and that's the only thing, that's one of the things that is concerning me, that it hasn't formed yet. So depending on what this does right now, will be very interesting. But from the looks of it, it looks like they're going to hold the level. If they hold the level, especially during non-farm payroll when there's a tremendous amount of volatility and liquidity coming in, then we should be fine. This position should hold strong, and it should come up. Again, I don't expect a big move. Like I said, 20, 30 pips max in that regard. The US yen is still holding, and that is what's giving me right now, to some degree, security on the decision that I've made to go short. But it's not over yet. You know, the market doesn't know which way to go right now. They are still undefined. But in our case, our gauge is this price level, 118.48. If it breaks 118.48, they are broken and done. And we are on the right side. So December unemployment holds at 9.9%. So this right now is very significant to us. If this one breaks, and everything else follows. And you can see that our pound dollar trade has already gone positive for us. Not by a lot, but enough to basically keep us, let's say, keep us happy. Let's take a look at the numbers here that came out. Let's do this. Okay. So Canadian employment change, 22,000 numbers came out better than expected, 22.8 thousand. Unemployment rate holds at 7.1%, which is good. Not great. Building permits, less than expected, and that's understandable. Average hourly earnings came in at 0, almost as expected, no real change, 292,000 jobs, where last month it was 252, so there's an increase. Unemployment rate maintains at 5.0 for the year, or for the beginning of the year, which is still good, and we don't know what wholesale inventories are. So in that regard, we can't really say, but you can see that our pound dollar trade is now positive. Our US yen trade is extremely positive right now, and our euro trade hasn't done much. We're barely up 2 pips, and normally when I see a trade that doesn't do much like this, it really upsets me, because this thing should have moved by now, as the others have already begun to move. So if I don't see a trade during non-farm payroll react, I'm out. I'll remove that position, because I know that it's a dangerous position to maintain. Now, same thing with the USCAD. USCAD right now hasn't really done anything. It's barely maintained. And after all this time, when the US yen and the pound dollar have moved, I'm expecting this one to really rip. And it hasn't done that. Again, seeing that a trade does not move does not give me confidence. Now it's starting to move, but I would need to see it come down 10 pips in order for me to maintain this position. And if it doesn't do that, then I'm out. So right now I believe we are we're at 10 pips, so I'm maintaining this position in that regard. As for the pound dollar, you can see that the pound dollar, where are you, you deceitful? We're up 11 pips, not a lot. Again, concerns are that we should have seen much more bigger moves at this point with some of these trades. This one is still holding. If you had a 15 pip stop loss, I would suggest move it to break even now. In fact, move it to positive 1 pip, 145.72. So at least you can lock in, some profit, not a lot. The US yen is still in play for us. It's still going short, but it's holding. Again, like I said, this price level here, 118.48, is very significant, because it's a 240 level. And if it breaks below that level, then, this trade will play out very nicely in our favor. But, we're starting to see some retracement in the pound dollar. and that's not good. So if it holds and continues, because they already broke through the trend dots, and it came up here, and unfortunately the trend stop is flatlining, which is something that I don't really like when it happens. So at this point, I'm somewhat concerned as to the direction of the continuity of this trade. I'm only down 1 pip, which is nothing. Now I'm up 1 pip. I'm down 2 pips on the CAD. So again, maybe this is the time to reverse this position because it may not play out any further. And that could be a sign based on the US yen that just didn't break below, but seems like it's pressing. And if it presses, then we should see that trade unfold very nicely. So at this point, we're in a good standing with the US yen trade. That one is the one that really favors us the most. This one is holding, which is good. I'd rather it hold than not. So it'll be interesting. But if this one, like I said, breaks below this price level, 118.48, and that's where it's at right now, then the rest of the trades will follow. This will be the leader of the pack. Again, we are not having significant moves for non-farm payroll. Actually, a very disappointing morning. I would have expected and anticipated much more action than what we're seeing right now, which is somewhat concerning in that regard. And the USCAD, for instance, I would have expected a lot more by now based on this move, and I'm not seeing it. So I really need to see them really come down through the floor. And if I don't see that in this next candle, then I'm probably out. The pound dollar is still holding. So this one, usually the US CAD is a late bloomer, but when it kicks hard. So I'm hoping that we're going to see it kick right now. Again, I'm not going for significant moves, but enough that would justify trading today. See this one here, we're only up 1 pip now. We were up 4, we're up 2, we're down 2. I mean, it's just not doing anything, and it should have reacted by now. So normally when I see something like this, again, it makes me sort of wonder what the legitimacy of the trade is. And with the amount of liquidity and volatility in this market, with an announcement like this, if I'm not seeing any action, I'm usually out. And in this case, I'm not seeing much action. So if I don't see anything literally within the next minute, I'll probably close this trade because it's telling me that it's not going to do anything. Because it should have done something by now. And sometimes breaking even or taking a pip out is safer than staying in it. Again, very disappointing trades on the euro and the pound. I would have expected more. As for the US yen, as you can see, this one has been, consistent in the direction. Now I'm expecting this, since it broke below and it's trading around this pivot. If it breaks below this pivot right here at 118.45, then 118.37 is in line, and then we're potentially looking at 118.25, another 20 pips to the downside. The US CAD finally broke. As you can see, we're up 10 pips, but it really needs to break below further. I need to see it here at 140.75, challenging that level very aggressively. And if it doesn't challenge that level, then it means that there is nothing to really stand for, and we move on. The US yen is still in play, as you can see. Probably the most consistent trade of the morning in that regard. Once it breaks 118.40, 118.38, they're done. It's a free fall in this case. But I'm not seeing much action on the US CAD, and that's concerning because we've been here before. And like I said, sometimes if you don't see much movement in a trade when it's non-farm payroll, there's nothing more to say or do. Take what you can get and move on. So we took 1 pip out of the euro, 1 pip out of the pound, 10 pips out of the USCAD, and the one that seems will give us a little bit, will be more rewarding, will be the US yen. I'd say that for a non-farm payroll, as disappointing as it was, I'd say we didn't do too bad. And this trade, like I said, this trade from our entry, I mean, if it goes down to 118.30, you know, we're talking a 37 pip drop. I'm thinking 40 pips to 118.27. So not a bad way to start off the year with non-farm payroll. And now that we're looking at this, I can add another indicator, which is the volume indicator and the price identifier, since we're only concentrating on one pair right now. Now, this doesn't change a thing. The uncertainty in the market is strong. Okay, sounds good. We'll talk. We'll talk a little later in that regard to schedule. Okay, so here, for instance, let's open this up. You know, again, we need to see more action. You know, it stopped right here with this pivot point 118.37. Didn't like that. And it announced long here, an imbalance long here. I'd say we got one more candle to the downside, because usually we'll have 2 or 3 candles. And that means that it'll come here to 118.27. And then after that, we should be done with this trade. The volume, we do have volume divergence here, as you can see. This one, you know, went up. It settled below the 0 line. This one went up aggressively. And of course, now we have volume divergence to the downside. So it's like this. Come on down. We're waiting for you. So we're at 118.32. Again, we have a real imbalance here, point of control by the buyers here and the sellers here. Here, it's very significant, but it looks like it's going to run. Oh my goodness, Lord have mercy! It broke through. I don't think it'll go any further from this point. You know, we're talking a 50 pip move. Let's see. Let's count that puppy up. No. Oh, I made a mistake. Forgive me. Let's see. From here to here. 40 pips. You know what? On a day like this, I'll take 40 pips any day. I can live with that trade. Don't have to really do much more in that regard. I think that we've proven the point. I don't think we got the total 40 pips, but I do believe that we got 38. I can live with a 38 pip move in that regard. So we took out 10 pips on the CAD, 38 pips. Let's add this up. As insignificant as it may seem, 38 pips on the yen, 10 pips on the USCAD, 1 pip on the euro, and 1 pip on the pound. We're up 50 pips for the morning on the most irrelevant, illiquid, non-farm payroll announcement for the first year. I say we did okay in that regard. What do you think? Hold on, let me see. 146 pips total. And happy, still learning. Can we set? I'm glad that you're up 146 pips. That means a lot, actually. So you see, even during non-farm payroll, we're able to do a lot more than most other traders, and the reason for it is because we're able to see these trades set up in a different way. We look at many things. It's not just about how they trade. It's about, if you look at the volume, and we didn't look at the volume because, we were too caught up in the trade, but look at this candle when they came in. This candle, there was a ton of high frequency, 174 million on the buy, 219 on the sell, negative 45 million. It's a bullish candle with negative volume. That in itself is a signal for us to go short. Then this candle, 462 on the buy, 418 on the sell, didn't break above, so the limit orders of 44 million were insignificant. And even though this is giving a little more to the downside, it's really not doing much more, than that. Then this one, the volume dies down and continues to go down further. 286 on the buy, 362 on the sell. The buyers give up. 75 million negative volume. Then this one, 22 on the buy, 11 on the sell. Buyers come in, but they can't do anything. And this is where I said, we may have one more candle, and this was the candle. You've got 231 on the buy, 234 on the sell, difference of 3 million right now, which is nothing. Negative volume. And it's not going down any further. So in this regard, we're done. Now, if we look at, what the pound has done, let's look at the CAD, because the CAD, I would be very disappointed if it went down further and I got too early, but I don't think so. So give it a minute because the volume indicator is taking up data. And we'll take a look at the future. We'll take a look at gold, silver, crude. Give it a second. It's taking a little bit longer than expected. There it is. Yeah, see, we got out right here. Look, it bounced right back up. That's why I said I wasn't that happy with that trade. Let me remove the volume indicator here. Question? Yes, we're gonna look at the Dow right now. Okay, so what happened here? Wrong indicator. My God. Let's remove this one. And let me add the volume price identifier. Give it a second. In this case, give it a minute. Okay, what? Okay, not good. Oh, I see what happened. No, remove. Okay, there it is. Now let me add the other one, indicator, and then we'll take a look at the futures, at the Dow and the S&P. And we'll look at it on a more long-term level, because everyone is screaming foul right now over the week, over the turmoil, financial turmoil that the markets endured these past 4 days. All right. So see, now this one's attempting to go up, but I'm not convinced. I'm not taking any action in it. It's all choppy, and I don't like chop. Let's take a look quickly at the euro, see what the euro did. See if it finally played out. Give it a minute. Yeah, see, we got out here, then it came back up, and now it's starting to come down. Now the long-term trade on this one says down because they came back and retested this level, which is a mid-range level, midpoint, and now it's coming down, but I'm not convinced, and I wouldn't take the risk at this point. Ouch. Not the way to go. Let's go take a look at the pound dollar real quickly, and then we'll move to the futures. Where are you? Where are you hiding? Here you go. So not bad for making 50 pips this morning on non-farm payroll. For those of you that just arrived, you missed it. We will put up the recording later today and send out a copy of the video so that you can see the trades that we took. We waited for the announcement, of course, and then we took positions, and we took 4 positions and came out with 50 pips. Not bad for the beginning of a new year. All right, so this one didn't do much. You know, we got out here. We shorted it. Yeah, this one, you know, we went long here, we shorted here, and it's down here, so it didn't do anything. Crying shame. Let's go to the Dow now and see what's happening there. Okay. Yes. Yes. Okay. So here's the beauty behind this trade, and we're going to look at it on a more long-term level because seeing it here just ain't going to fly with me. So let's look on the 30-minute and work our way down, because I'm looking at the bigger picture. Okay, now see this trade, you know, they started going long today at 7:30 a.m. Eastern. You know, mine is showing Pacific time. So this is where they made the move. Now they bounced right off of the trend stop here, which has flatlined. Now they're trying to hold this level as much as possible. They do not want it to go down, you know, to 16,370 any further. You know, it's more like a slap in the face what they got this week. More like a spanking more than a slap in the face. They got both. A slap in the face and then a spanking to remind them that they are not untouchable. However, you know, we're looking to see what is the next trade. You know, how will this react? Now, jobs numbers came out and they were very good, but so good that this thing should have popped to 16,850 easily, and it didn't. And when that doesn't happen, the way it didn't happen here, then basically, you know, I'm looking for a short at this point. So we didn't see the trade earlier because we were not really looking at it, but, you know, now that we're looking at it, I'm saying this thing's going to crumble from this point. Now, I'm not willing to risk more than 15 ticks on this, you know, but I'd say that they have a pretty bad problem in their hands. Now that moved pretty aggressively against me, 9 ticks, so I won't give up, you know, I don't think that they're going to hold, and I think that they're going to break right through this level and come down here and then really come down. So don't expect it to come down a lot, 16,529. Maybe come down to the open, 16,463. And that's a pretty significant drop. If that does, we're talking about a 100-point drop on the Dow. If that's the case, it's going to get really nasty really quickly for them. But, you know, we're only we're positive 1 tick now. So let's see if I am correct in my assessment. And if I am correct, we are in a bearish market, ladies and gentlemen, of the worst kind. And that means that if you have a 401k, it's going to become a 201k because it ain't going to be pretty. Hedging would be appropriate if you can. Buying my software would be even better because then you'll be able to learn how to take adverse positions to protect yourself when everyone is looking for a more long-term trade. I'm looking for the reality trade, which is to protect and not be a victim. We have to take accountability for our finances. And putting in the time to learn how to trade now has become a necessity. It's no longer something that you can put off. In this type of market environment, it is survival of the fittest. And you're either going to survive or you're going to die, fall. You're going to fall right through the cracks. There is nothing that I can do for you if you don't help yourself. You know, change is not easy to do. I've always said that. But if you don't change and adapt, then you'll be forgotten. And that isn't a way to continue. At least not in my eyes. So yeah, I think that we're in a good trade here. And you know, it's funny how they set up this trade. It looks like a beautiful head and shoulders. And it's got to come down all the way down here. 16,389. So we'll see if it plays out that way. It would be a beautiful thing. Then it would make non-farm payroll a really rewarding non-farm payroll. You know, because we've already made 50 pips. We made 38 pips on the US yen. We made 10 pips on the USCAD. We made 1 pip on the euro and made 1 pip on the pound, only because they didn't move. So we took our positions off of those two trades that just didn't give. And now, of course, you know, we're up quite a bit. We're up 40 ticks. 40 points on, almost 40 points on the Dow. I'm shorting it. I mean, if this thing moves 80 points in our favor, I'm jumping through the roof. And here it comes. It's moving very aggressively. And we're on a 10-minute. So I would actually move to a 7-minute at this point. Because the 7-minute is one of those that no one likes to trade. You know, and see, here's why. Here is why. See this level? They just hit it and bounced right off of it. Now I'm thinking they're going to break through it, but like I said, you know, it's going to take some time for it to happen, but it looks like the numbers weren't enough to stop the financial bleeding in the markets. And China's situation ain't looking any prettier. I mean, we are up, we're up quite a bit. Come on, break right through that level. You rip right through that level, 16,524, and we all got a smile on our face. So has anyone taken this position? It would be the good moment, a good time. If you have, you should have a smile on your face because it should be very rewarding at this point, at this time of the day. Now, in between this, I'm going to give you my contact information because, you know, we're going to let this trade play, give it some breathing room. So for those of you that wish to learn more on our strategy, on our technology, and how you can empower yourself with knowledge to trade, my email is ricardo@phoenixtradingstrategies.com. My phone number is 818-431-1357. Now, let's see where this is heading, because I would be very disappointed if it only held here at 16,524. I think it's got to come down further. Now, if that's the case, then that's also because crude is giving it a beat down. Let's take a look at crude real quickly. Question. Up 50. Nice, Paul. Good for you. Yeah, see, crude is down 33.28. You know, crude's going to come down. My forecast a month ago, when it was, you know, above 40, was that it was going to come down to 25. But first it comes down to 30. And I said that it would probably go up to 34. You know, I posted this yesterday. And then from 34, it would dive to 30. So I think we're in that position right now where it's going to dive to 30 in that regard. So yeah, crude is helping us at this point because they can't contain crude. So 16,578, 16,535. Oh, you got out here, you lucky dog. 16,525 is where you got out with your 50 points. Yeah, see, here's the thing. When you're up in a trade, greed cannot be the driving force. And if you've already had a positive morning before taking a trade, then sometimes we make the mistake of leaving money on the table when we should actually be taking money off the table. In this case, you know, I'm expecting this to break below 16,524. And if it does, then I know that it's going to fall horrendously. But at the same time, you know, with that statement, I'm already up 50 pips for the day in the morning. So I don't really need to prove anything. And sometimes you have to take that mindset that you may be able to forecast a direction, but if you've got money on the table, and in this case, they're going to play this, I'm not going short, I'm going long. No, you know, this is more of a, you would have expected more liquidity, more momentum, more volume in the market, definitely a lot more price action, and it hasn't given it. So when we look at that, you know, sometimes it's better to take what's on the table and not think twice about it. It's Friday, you know, if it was any better, great, but it's not. And so sometimes, like I said, it's just better to walk away from a trade and know that you got the best of them. So at this point, we got the best of them. You know, Paul, for instance, took that trade and made 50 points on it. I'm sure he has a smile on his face like there is no other. We'll be talking, Paul, very shortly. Make sure you send me an email with your phone number. If we're looking more on the macro level of what's happening, I would like to be the optimist and say that the markets are going to recover. Unfortunately, I can't. And the reason I say that is because China is having a cold. I'd say pneumonia of the worst kind. And that means that there will be substantial ramifications taking place in the markets. And they're going to drag everyone right to the ground. It is not going to be pretty, but to some degree necessary. A lot of people are saying that what's happening right now is a repeat of 2008. It's not a repeat of 2008. This is above and beyond 2008. I'd like to say it's worse, but it hasn't completely finished. And the reason why I say that is because global markets are interconnected now, more so than ever. And so if one has a hiccup, everyone else has a hiccup. But now China having a hiccup and more likely falling into a recession, which is what is going to take these markets down, is the difference. See, this is a Russell. I love the Russell. You know, one of my clients, Sandy, loves to play the Russell and only the Russell. God bless her for it because she introduced me to it, and I was never really a fan of it, but it is a beauty when it hits. Let's see if the Dow came down a little further. So don't expect a bullish run yet. See, look at that. Treacherous dogs. I hate when they do that. Hit my mark right on the money again. I would have gotten that with a better price, but I don't think, you know, and it more than likely will come down further from, see, look, they're practically breaking my levels. Ow! That hurts just saying it. Now, crude is a major force right now. You know, in the type of global economic environment that we're in, crude could not sustain the levels that it was sustaining. And reason for it is very simple. You got to give the middle class the opportunity to recover. They're the driving force behind economies. Now, not every economy has a middle class, but the Chinese one does, and it's a very big one, huge. Where ours has been impacted and decimated to some degree, theirs has been emerging. So we have to look at all those factors. Now, you know, we have geopolitical events taking place. You got that idiot in North Korea blowing up a so-called hydrogen bomb, causing an earthquake, you know, in his own backyard. And you got to be really, really psychotic to do such a thing. And that really threw the Chinese markets into a turmoil of no other, because everyone went short, thinking that that psycho has a hydrogen bomb is the worst thing that could happen to the region. Talk about destabilization. That's bad. Really, really bad. So not a good thing in that regard. You know, like I said, sometimes these events only help our cause. In our case, we're looking for trade opportunities. We're looking to take advantage of their demise and even their benefit. But right now, it's really their demise, because if we look at this, you know, I'm going to go to the higher time frame, the one that no one really likes, which is a 720, a 12-hour. You're going to see that crude started to unfold over a month ago, and it was pretty bad. It wasn't pretty. You know, we're getting some really serious signals. You know, the signal for this one came close to, let's see, the 24th, the 25th is when this thing basically gave us a signal to go short. From $38, you know, it's come all the way down to 33. That's not bad. You know, if we go to the daily, and let's go to the day, let's go to the weekly. Forget the daily. Oh no, I had to remove that indicator. Oh God, I could kick myself. Give it a moment. Someone raised their hand. Who raised their hand? Scott, did you raise your hand? You can actually type in the question. Give it a second. Oh my. See, the volume price identifier doesn't go beyond the 1440 minute, which is the daily. So what we're having right now is a moment of how can I say this? A minor setback. I may have to turn NinjaTrader off and turn it back on. So I think we're going to have to do that. So let's do that. Give me 2 minutes. Okay, so we're bringing Ninja right back up. So we're going to look only at the futures right now, because I really don't want to look at anything else. So let's go to the Dow. We were looking at the Dow. And yeah, so see, it's holding right here. This is a 10-minute. We shorted it here, came down here, and now we got out here, and now it's holding here. So it's a 50-point move, you know. But getting back to the geopolitical events that have been taking place, you know, the Saudis and the Iranians are having a very strong religious dispute amongst themselves, which is starting to take toll in Yemen. Now, the Saudis and the Iranians have been fighting it out in Yemen. Not too many people are aware of that. Again, it is a difference of religious ideology on their half, but it isn't enough to drive crude up. That's what I'm trying to get at, that it isn't enough. See here, for instance, they're holding crude above 33.17, which is literally above the today's low of 33.13. So they're trying to hold this price level as much as possible, because the severity of the situation is that they took a beatdown, which was a very severe beatdown, the past 4 days. since, like I said, since Monday, we took a trade and we shorted at 38.22. The highest was 38.30, and it's down to 33 right now, 20 to some degree. So, you're talking about a $5 move in crude that most people didn't really expect or anticipate we were able to catch. Gold, I took a trade on gold. Gold, I love gold because it moves, and when it moves, it really just does its thing. I took a trade here on this one at 1096.60, and this was Thursday evening, and then I closed it here, and it was a $10 move. Now, who was I to think that this was going to go even higher, another $10? I would have been happy with a $20 move, and it has come back, but it has now set a precedent, because of the move that gold did, and now the fact that they came down to 1091, made a support level of this price level, which is really not 1091 but 1095, tells me that we're going to see a flight to safety, and gold is going to be a major player. So if we go into the higher time frames, and now we can go into the higher time frames, we'll go into the weekly, for instance. This one's not giving me much. The daily. So the daily, see how 1093 has become at one point was a resistance level, and now it's become a support level, and now they're trading off of this level. Now, if they break above 1101, or in this case, I'm thinking 1103, the way they did, day before, then we should see gold make a move to 1138. And if we see that, we'll probably see that thing come right back up to, 1190. I have a bullish sentiment on this right now. I like gold long. I don't like it short. If you see it retrace, come down, I would say consider taking a position long, buy options and ride that wave up, because there's a flight to safety, and that flight to safety will be very profitable. A lot of people believe that it's going to take a year before gold reaches 11,250 or 1250. I don't think so. I think that it's going to creep up on everyone, and no one's going to see it coming. And when it comes, it's going to come fast and aggressive, and everyone's going to say, Ricardo told me to go long the gold, and I didn't do it. So, yeah, I would say, definitely think twice about that. Now, crude is a whole other animal. And like I said, this thing has just broken levels that I haven't seen in a long time. So I'm expecting crude to continue to be bearish. And if it continues its bearish tone, we will hit $30 a barrel very soon. Now, when we hit 30, do not expect it to break below 30. Expect it to bounce back up to 34, and then we're going to see a nosedive. And once that nosedive begins, we should see it come to $28. In a worst case scenario, 25, and then it'll level off at around 30. So, but look at where we got the signal. This was in November. This is a daily, but this is in November 3rd is when we got the signal to short crude, when it was at practically $50. So, our technology is forecasting trades that many people would never even consider thinking would happen. We are getting them. Now, this is on crude. If we look at silver, you can say silver, we started to see silver. We got a signal on the 7th of December to go short. Now, they've been playing off of this level, which is basically off on the 24th, of course, and they ended up going along on the 4th. Now, this one hasn't really made a move the way gold has. It's been very disappointing in that regard. But gold has already made that move, and that means that if gold has made that move, silver will follow. So I'm thinking that right now is a good time to start looking for entries on silver, because silver is one of those that when it moves, it slices like a sword. You're either holding the sword or you're getting sliced. So consider looking at option strategies to position yourself for silver, because I think silver is that silent giant that doesn't say much, but when it moves, it hurts. And it's going to hurt the markets in a very big way, because I don't think they're seeing the trade that we are. In gold, we're seeing the trade. It is clear as stone. They're bullish, and it ain't coming down. So, in that regard, regardless of the fact that China is buying or not, India is buying as much gold as possible, because the Indians love gold. God bless their soul. So we're going to look at it from that perspective. The DAX, the German markets, I mean, we got a signal to short this thing literally on the 30th. The 30th we got the signal. Go short. It's come down from 10,894, to as low as 98.33. I mean, talk about dissension in the ranks. Not a pretty picture for the DAX. As for the Dow, we got a signal to short this thing in November 20th. I mean, what more do you want? Seriously. This is these are the type of trades that you should be looking for, dreaming about, quite honestly. And then the signal repeated itself again on the 29th that it was going to go down. So, you have to be more objective of how you're trading. And right now, see how they are trading around this power dot? Whenever you see a power dot that forms like this, it's usually the price target that they're going to hit. Now, this is an anomaly within my software that, to some degree, I haven't been able to figure out why it forms. And that's okay, because I have a mathematical answer for everything. But in this case, this thing has thrown me off. It's like a shooting star. And whenever it forms, it's because they're spoofing. And what do I mean by spoofing? Spoofing is when they start throwing out limit orders way out of the market, way out of where the market is being quoted. And when they do such a thing, it's because they're setting up a trade for it, not in the present, but in the future. Now, again, this thing took quite a bit. It took, over a month and a half before they hit this level. So on the higher time frames, this is a great trade, a trade to definitely look at in that regard. And now that they've broken this level, guess what? Because they've broken this level, I'm afraid that we're in a bearish market. We're going down to 15,800. Whether they like it or not, they can't stop it. So I'd say, it's time to define strategies to protect ourselves against an unwinding market, which is being somehow driven by geopolitical fundamental events. But really, it's not. You see, this move was anticipated in advance based on the fact that when the Federal Reserve came out to raise interest rates a quarter point, everyone knew the way the banks have programmed their algorithms is to react not immediately, but to react in a way that it is not even susceptible to the retail trader. And they set this up. They knew that this was going to go short. They were just waiting for that, what we call that push, that would, that that last drop in a glass of water that overflows. And they knew that once that happened, then they had the perfect excuse to take the market down. Now, I'm not saying they programmed a bearish market. No. See, they had programmed to come down here, 17,000. That's as low as they wanted to go. The geopolitical events have pushed them to go down even further. But now, to the extent that they are probably going to come down here, 15,800 is no longer a level far off. Because with the North Koreans doing what they're doing, it's going to affect the markets. With the Chinese recession coming into play, it's going to affect the markets. with the Middle East conflict between ISIS, the Saudis, the Iranians, it's going to increase the probability of our markets becoming even more bearish, such as the case that the Saudi government is considering very heavily to do an IPO for Saudi Aramco. When on earth did they ever consider sharing their wealth? Never in the life. So when you start to see that these events taking place and drastic measures being taken by sovereign wealth funds, it sort of puts you on the edge. Do you stay or do you go? In this case, we're not going to stay bullish because we know that they're going to set it up to go bearish. So I think option strategies are in order here. But again, what I'm sharing with you is information based on what I'm seeing in the market. Now, being that said and done, with interest rates, now that we are in a situation of despair, you could say, by the financial markets, I don't think bonds are going to make that move to the upside. Now, granted, we got a signal here in December 3rd, go long. December 3rd. See, everyone pretty much had an idea that Janet Yellen and the Federal Reserve were going to raise interest rates on the 15th. So when the 15th came about, it did go up, no question, and then it came down. Why did they come down? Because current bonds were losing value. So they increased right before they came down, but now they're up again, then they came down. Now they're up again. And so now I think that she doesn't have much of a choice but to reduce interest rates. So that quarter point that she raised is actually going to be her demise, because she should have raised that quarter point in October, or even a half a point in October when she had everything in line. She made the mistake of not doing so, and because of that, she's going to pay for it. And so are we. So I don't think bonds are going to be doing much for quite some time. Now, if she does that, then our bonds aren't worth anything. And then we're expecting, once again, for the Chinese to bail us out, because there isn't anyone out there with enough cash to bail us out. Now, this is the S&P. And again, we got the signal here, November 20th. November 20th goes short. Imagine if you would have known November 20th, November 25th, that this was going to go short here from, let's say, 2096 to where it's currently at. Would you have not bought puts and just shorted the daylights out of this trade? I mean, just spanked them, because slapping them is a kind word at this moment. They've gotten a spanking of the worst kind. And it's going to get worse, because S&P is definitely going to come down here to 1881. I'd say 1900 first. Once they hit 1900, they're going to try and defend that level like if there was no more. They're going to throw the kitchen sink to defend that level. And they're going to borrow every dollar they can to do so. But it ain't going to be enough. I think they're going to come right back down to 1880, and then from that point, it'll level off. And once that happens, then we'll see a bullish trade. Right now, I wouldn't be bullish. I wouldn't be bearish. I'm waiting for them to actually come up. I think they're going to bring it up to 1981 before they come down, or even 1976. So if they come up to 1980 again, then from that point, I'm thinking short, and it ain't going to be pretty, because it's going to be a nosedive of the worst kind before we actually see the markets settle where they should. So, what's his name from the Gartman letter came out yesterday saying that he was wrong. He thought the markets were bullish. And of course, now he goes, we're in a bearish market. I've been saying we were bearish for, since October, that we were going to be in a bearish market. Yet no one seems to listen to Ricardo. And all these analysts come out these past few days, oh no, this is a correction. This is no correction. This is a restructuring of financial irresponsibility is what we call it. So we're able to see our indicators basically follow the smart money. What is a smart money? Smart money is where the big banks move and how they move. Now, their programs are designed to protect their risk. So we're basically, what we've designed is basically to take their money. Now, when their programs are designed to protect their risk, then basically they're trading on the defensive, not on the offensive. So you and I are trading on the offensive of their moves. So if they're being defensive, then we're being aggressive. So in this case, they were already defensive and we've already been aggressive. Now it's just a matter of being patient and waiting for them to make the mistake again of giving us the opportunity to take their trades. Now the NASDAQ is another one. The NASDAQ is, we got the signal in this one again, November 20th. I mean, consistency is a beautiful thing. And then we got it again here on the 29th. So if on the 29th you would have known that from 46.91 and a half, it was going to come down to 43.42, would you have shortened it? The question is, how valuable is the information that we're providing to you? Is it valuable enough that you think it will make a difference in your trading? And if so, then you can't afford not to look at this any further. You can't afford not to miss this. Now, I have a client that trades a SPY, the Australian SPY, and I'm sure he loved this trade from 53 all the way down because he's more of a position trader. From 53 all the way down to 49.30, believe me, the smile on that man's face is beyond what people can ever imagine. I like trading the DAX. The DAX is a beautiful market. Now, signals on this thing aren't that consistent the way they are on the Dow, the S&P, the NASDAQ, and even the Russell. On the Russell, we didn't get the signal, November 20th. We did get a signal on the 24th, but it wasn't as consistent as it was in the Dow or the other E-minis. The DAX is super volatile. It is a monster. It can rip you limb from limb if you're on the wrong side of the trade. I'm usually on the right side of the trade. 90% of the time when I analyze that market, we get some great trades out of it. So, yes, it is an account killer. But if you're trading with Phoenix Trading Strategies, it doesn't have to be. It can be an account blessing. So let me give you my email one more time, Ricardo at phoenixtradingstrategies.com. I put it in the chat. Send me an email, send me a phone number, or we can talk through Skype. My Skype is Ricardo at PFG. Or if you feel brave enough that you want to ask some questions, by all means, don't be scared. My phone number is area code 818-431-1357. I'm here in the United States. And again, the Russell, here on the 30th, it was late. We got it on the 29th on the others. On the 30th, it had already moved. So long-term trades right now look very, very good. And look at this. It's right back down to where it was in September of 2015. Like I said, we're seeing unprecedented moves in markets that we haven't seen in a long time. Look at this. We're at 33.16 again in crude, 33.18. So, yeah, you need to look at the market from a different perspective. We'll look at the 480 minute. Let me add more data to this now. We'll go to 50 days. So, yes, right now is the time to really, really position yourself the right way. And if you do so, you're going to do it with Phoenix Trading Strategies. And if not, you're going to miss out on some great opportunities and a great trading year where your life can change. Today we proved it. Non-farm payroll was a bust, and yet we were able to come out with 30 points on the Dow. We were able to come out with 50 pips on foreign exchange. It doesn't get any much more clear or better than that. So I feel that at this point in time, the markets aren't going to do anything more. They're pretty much a dead duck. And it's more or less time to just say thank you for joining us today. And we will see you Monday morning. Monday morning at 9 a.m. Eastern Time, we will be here. Remember, phoenixtradingstrategies.com, where strategic knowledge and information allows you to trade successfully. For those of you that feel that you are interested in looking at our indicator suite, our technology, and our trading, feel free to send me an email, give me a call, Skype me. We'll talk about it. We'll get you set up just like we have our other students that are now having great success trading. Have a great day. Have a great weekend. Have a great month. And remember, if you really want to learn how to trade successfully, you have to want to make that change. And if you're not willing to make that change, then I don't know what more to say to you, quite honestly. Trading isn't for everyone, but in this point, it's not what we want, it's what we need. The necessity demands action. The necessity to basically save yourself from someone else's demise, in this case, our governments, because they don't know what they're doing anymore. So we need to know what we have to do to basically counteract their irresponsibility. I leave you with that. Have a great day. Have a great evening. Have a great weekend. I'll see you Monday morning. And again, if you're interested in learning how to trade more, feel free to send me an email, Skype me, call me, and we will talk. Thank you so much for joining us here at Phoenix Trading Strategies. Have a great day. Bye-bye now.